Joining us on the show now is Peter McGuire from Exim Australia. Peter, hi, good to have you. I want to start talking about the crude oil prices, which have been quite volatile. A 5% of a move yesterday and a rebound from those kind of lows is what we're looking at right now. So while Russia-Ukraine is one part of it, but Libya and the OPEC production and the macro factors, the IMF global growth report, I mean, there's just so much that the markets are reacting to. How do you look at the crude oil prices now, and what's your sense majorly on demand and supply now?
Well, Manisha, I think first off, volatility is the name of the game, and that's really allowing traders to take advantage of these huge price whipsaws over a 24 or 36-hour window. And when it's game on, it's game on. And that's what we've experienced in the last 24 or so hours. Now, those numbers coming out of IMF, I'm conscious of them. They're down 0.8. We're looking at, a realignment as far as US, China and India as far as downgrade forecasts. We're going to 3.6%. That's what they're saying in 2022. You're looking at OPEC plus and what their concerns are. But really, there's just so much to take on board. And the other side, as you mentioned, Manisha, is certainly Russia.
Oh, well, yes. I want to get the currency perspective as well, with dollar index hitting 101 and Japanese yen at a 20-year lows versus the US dollar. I mean, we don't talk so much about the currency markets, but that clearly is having its impact too.
Well, exactly right. I'll tell you what, if you're traveling to Tokyo, now's the time to do it if you've got a bucket full of US dollars, because the buying power is just so incredible, nearly at 130. You know, we're very big in the currency markets and we've got global traders, and we just can't believe the size of this move that we've experienced in the last month and a half has been dramatic. And have a look also, Aussie yen, pound yen, euro yen. I mean, all those cross rates, and you've got that US dollar index now at just under 101. It was through there a matter of a couple of hours ago. It's given up a little bit of that hot air. So I think it's around about 100.80.
Not out traveling to Tokyo anytime soon, but I will definitely buy and keep Japanese yen if I can do that. But, are you expecting further gains on dollar index from here? I mean, that would tell us on how the commodities can fare too.
Well, I think so. The reason why is because you've got the likes of St. Louis chair or St. Louis president, what he's talking as far as, is there a chance of a 75 basis point hit up? Maybe not this meeting, but certainly it's on the forecast over the next couple of meetings. So if they were able to, boost it up 75 basis points, then that would really rattle the markets. I think a lot of it's been baked in, but when they start raising rates and raising them aggressively to contain inflation, then that's really going to push, I think, US dollar index to that 102, 103 sort of number. I'm not suggesting we're going to touch a 105, but at the moment, I think there's a little bit further uptick yet.
And purely getting a perspective on how the commodities will react then, because, US dollar, the Fed is quite aggressive. And as you mentioned, there could be those rate hikes coming in there. But that's not the case with China, and definitely not the case with Japan as well, is the reason we are looking at the Japanese currency declining so much. How are you looking at then these other countries which are not as aggressive, and will that have an impact in the global markets, in global commodities?
Well, it'll have an impact, Manisha. There's no doubting that, but I don't necessarily think appetites will wane too significantly. The cost of them, as far as demand destruction, a lot of the countries probably have built stockpiles while we had cheap buying in 2020 and 2021. So there's the early parts of it, of course, is really where we're looking. So there's the first part. The second part is, I don't necessarily think the commodities are going to come off the boil. I just think that there's a time and a place that people say, right, I won't be buying this month because of the weakness of the yen or the value of the dollar. So I think it's going to be an interesting next 2 to 3 months over this northern hemisphere summer to really take an appreciation as far as whether we see demand destruction and the global economy and how it's performing with inflation.
Clearly. And it's not just crude which fell 5% overnight. We had gasoline prices declining by 5%. Natural gas was down by 10%. I mean, that's a more volatile commodity, clearly. A very strong rebound in coal, though, is what we saw. How are you reading these moves? And, I was talking to somebody and they said it's not so much of conventional money managers really manning their desks right now. It is more about algorithms. That is what leads to these 5 to 10% moves on every first or an alternative day, really.
Absolutely. Algorithms really drive the market. And, as you know, the maths and the quant traders and their appetite towards this and, the big currency traders and commodities. So, nat gas has been the wild bronco. If there's ever a market, I laugh at it because it's just so dynamic. It really is just an enormous market to trade. And if you really want to hold on and hang on, that when the nat gas market moves, it moves big time. And that was demonstrated, as you mentioned, with a 10% wipeout. So, it's not unusual to see those big ticks. And this week won't surprise. We've had Easter and now we're onward and upward from here for volatility.